All right, at least one member of our Bulls and Bears panel thinks the Fed should stop talking and significantly raise interest rates, such as up to 8% or more.
Terry Keenan is joining us. Jonas, Max Ferris, Todd Wildman, and Peter Schiff. Let me guess. Among this quadrant here, I suspect Peter Schiff thinks the 8% mark is right.
Who knows? It could be higher than that. I mean, first of all, regardless of what the Fed wants or the Treasury wants, the dollar's going a lot lower, and just about every American is going to suffer as a result. And the Fed statement today, I think, was extremely dovish, even for the Fed. They basically said, we expect inflation to moderate.
With the exception of Richard Fisher.
Well, but the overall statement, they expect inflation to moderate next year. They've been saying this for years. There's no evidence of that. All the evidence is the opposite of that. They did acknowledge that inflation expectations were picking up, but obviously the Fed disagrees with it. So basically what the Fed is saying is, we think it's going to be a sunny day, but we recognize that a lot of people are carrying umbrellas. That's all they're saying. And I think this is going to be very bearish for the dollar in the near term.
Jonas, I got to ask you something. Here's the situation. The Fed tends to look toward the oil futures markets to get oil prices. Oil futures were coming down. So does that mean that the Fed has been underestimating inflation potentially?
I don't think the Fed has been underestimating inflation as much as everybody thinks. Let's not forget the Fed has what they consider inflation, and they use things like home prices are factored as a bigger part of inflation than some of the energy. And they are going down a lot. We just saw that this week. So and a lot of non-necessity items are falling very fast in price. And
they can't afford them anymore. They're spending all their money on
Let him speak. He's holding his one side.
That there's 10% inflation is a big bunch of hooey by all the gold bugs.
No, it's not.
These are economists who've been developing this for dozens and dozens of years.
They haven't.
And things like, for example, everyone criticizes that the quality improvement shouldn't be factored in, but the bottom line is cars today are cheaper adjusting for inflation than they were when you factor in all the...
All right, but Terry Jonas is leaving out one word, oil. A lot of the pressure on oil comes from the weakness of the dollar.
You can't say there's no inflation when there's inflation in the things that you need to live, and there's no inflation in the things that you really don't need, like a flat screen TV. Right. I mean, there's a lot of inflation out there, and I feel like you could draw a little box right around Ben Bernanke every time you see him walk around, because he is in such a bind here. We used to say that Greenspan was the maestro. I mean, he was just playing checkers. Bernanke is trying to play a three-dimensional game of chess here, trying to prop up the dollar, keep the economy going, bring down inflation.
Regulate.
It's not working so far.
He's Ben Bernanke to the
But he's not trying to keep down inflation. He's creating as much as he can. He's just hoping nobody notices, because he doesn't want, when I said they need to raise rates up to 8% or higher, the problem is we got to get rid of the inflation. It's going to mean there's going to be a disastrous recession, but we got to suck it up, because it's worse what they're doing.
Well, Todd, what do you think? 8%? Is that where we need to go?
No, let's go back to 4%. But let's do it real slow and give the market time to adjust. And, let's try to put it off as long as possible, into this year. But, it's true. He's in a box. He would like to soak up the excess liquidity, get gold back below 500. Sorry, Peter. But, he can't, because we're in a slow growth. We're almost teetering on a recession. People are spending 3 times as much on gas as they did 3 years ago. It's just not working.
We're in recession.
What do you do?
All right, but Jonas, what about the multiple tasks that the Fed has on its plate right now? Is it too much to do all the things that it's being forced to do, including regulatory responsibilities that the SEC used to have?
Well, I like what the panelist said before we started this segment, which is you really want the dollar to fix itself naturally, and I think that's what the Federal Reserve is waiting for, which is what happens is as the dollar weakens, we sell more stuff and we buy less flat panel TVs and we sell more cars abroad because they're cheaper. That will fix it, and the Fed's hoping that kicks in before they have to do something emergency.
Here is a look at what's still ahead today on Bulls and Bears. The poster child for the subprime meltdown, Countrywide Financial, making more headlines today. 3 states are now accusing the company of unfair and deceptive lending practices.
California's Attorney General saying Countrywide exploited the American dream of home ownership. And the AG in Illinois charging the company saying it harmed tens of thousands of borrowers. And now Washington's governor claiming Countrywide targeted minorities.
While all this was going on, Countrywide shareholders today approving a Bank of America takeover. That's not a surprise, but should B of A really be buying this company? Let's ask our Bulls and Bears panel. Yeah, it's no surprise, Terry, that Countrywide shareholders are ecstatic
it's like
about...
Make my day.
Exactly. But Bank of American shareholders, what should they be thinking about this?
They should be thinking, what the heck is going on? And, frankly, what I think is going on is that the Federal Reserve, quietly pushed B of A to make this acquisition.
We should mention, by the way, you've been targeting that. You've seen this coming a long way. You were one of the first people that spotted this as problems. But it's so down the line now. Is it possible for the shareholders to pull back and say, we don't want it?
I don't think so. I think it's pretty much a done deal. And you have to remember, Countrywide put Bank of America put $2 billion into Countrywide last August, on coincidentally the same day that the Fed opened up the discount window to Bank of America for $2 billion. But, so they already have a lot of money already in this thing.
Peter, the idea is that Bank of America is buying Countrywide's footprint, but can it afford to inherit all of Countrywide's problems?
Countrywide is a liability. I wouldn't take it if you gave it to me.
Let's tick it off. FBI investigation, FTC investigation, SEC is bearing down.
Look, it's lawsuits. I mean, look, when they first announced this deal, I said that anybody who owned Bank of America should dump the stock. It was going to be a drag on their earnings for years to come. There's nothing about Countrywide worth owning. If they wanted any of the assets, Bank of America should have let them go bankrupt, and then they could have picked the assets that they choose. They could have bought them without any of the liabilities.
So, Todd Wildman, this is crazy. I mean, we're looking at a train wreck about to happen, and we can't. Isn't there anything we can do to prevent it from happening?
Pretty much no, not for Bank of America. Remember the housing bill, what it's called in Congress among the Republicans, it's the Bank of America bailout bill.
That's
because
right.
Remember, all the mortgages that Countrywide issued, now you got this bailout from the federal government, and that's going to help Bank of America. If that bill doesn't pass or the president vetoes it and the Congress can't override the veto, Bank of America is going to be in deep trouble.
By the way,
because I worry more about the losses from the foreclosure than I worry about the
Yeah. And by the way, Jonas, let's face it. Countrywide basically pointed its conveyor belt at the Merrill Lynches of the world, who packaged these, Frankenstein securities backed by dead loans walking, this crazy drunken daisy chain of CDOs, right? So they could not possibly not let this Countrywide bank fail. I mean, is that what's going on here?
Countrywide couldn't handle the lending that they were doing, could not handle a downturn in real estate prices. It was a bit of a Ponzi scheme. It's not that it was so evil. As far as the deceptive practice, I get a deceptive offer every week from a financial service company. When they say take out a home equity loan or your credit card advance to buy a vacation, that's
but the loans backing these, in other words, more write-downs could have happened and erupted if Countrywide failed, right?
Countrywide there was no future.
I'm talking about a Merrill Lynch and on Wall Street.
This company is going to cost Bank of America $20 billion. If they were independent, they would be.
What do you say, Terry Moore?
I think that Todd is right, that the home bailout is going to protect Bank of America to some of the downside, the same way J.P. Morgan is protected on the downside for Bear Stearns.
The real outrage is that taxpayers are going to have to pay for this.
Exactly.
Yeah. And of course, Bank of America is going to have problems with their existing loan base, their home equity loans, their credit cards that they've got on their books.
Shareholders are going to be paying for this because Bank of America is going to have to get that $2 billion back by offering stock when the stock falls another 50%.
And
they've all been
Angelo
doing
Mozilla walks away with hundreds of millions of dollars.
Ouch on that. We got to leave this segment, and we're going to be talking about the California lawsuit with We round out our show with what you need to know.
And today we found out what Warren Buffett thinks we need to know about the job market. Here's what he told our very own Liz Clayman.
I think it probably will, but that's what's helped us so far is that it took that jump to 5.5% last month. But so far, unemployment really hasn't caught fire, but business is slowing down, so I would worry about that.
All right. Well, is unemployment really a worry? Let's see what our panel thinks. First to Jonas. What do you think, Jonas?
No, it's not really a worry yet. In fact, I would argue a little rising unemployment would remove all these inflation fears, because that's really what drives inflation is labor cost at the end of the day. At the end of the day, that's the most important thing. And right now, we have a decent unemployment rate. So far, we've been able to have a huge meltdown in real estate without it really hurting the broader economy that much.
Let's let Peter.
Well, first of all, it's already a much bigger problem than the statistics show. There's a lot of people who are underemployed, who are discouraged, who are working part-time. They want full-time jobs. They're working. They're unemployed, but they barely make any money. But unfortunately, the unemployment rate officially is still going to go a lot higher. As Americans have to cut back because they're spending so much money on food and energy and insurance and taxes.
Does it affect inflation, though?
No, it doesn't affect inflation. Inflation is going to go up despite unemployment. Okay. And, it makes it worse because prices are going up, but wages aren't.
You see that wagging finger in front of you? That's Terry.
Oh, that's just my pet.
Terry. Don't let the boys take all the time.
No, I somewhat agree with Peter. I mean, I don't think that the jobless rate, and I do think it's going higher, I don't think it affects inflation. What's interesting this time is that we're not getting wage inflation because people don't have that power over their employers, and that's going to be a problem because everyone's so heavily indebted. So they have inflation and the wages aren't going up. So how are they going to pay their bills?
Well, Todd, what do you say?
I think that the Oracle might be a little off. He's always bearish a lot. He's been bearish a lot in the last 10 years, and yet the market, hasn't, fallen, and, the economy hasn't fallen off the cliff. I mean, we're in a tough situation with slow growth, and we could slip into a recession, but we're not there yet because we'll only have one quarter. So just hold off on the recession. But we're a slow growth, and inflation and unemployment will be ticking up probably to 6% by the end of the year. Neither good.
One thing that people might want to be bearish about is Berkshire Hathaway stock. That's been sort of in the dumps recently, ever since their shareholder meeting.
Yeah,
There's some concerns. Insurance companies are going to have some problems over the next couple of years. They are, at the end of the day, an insurance company.
And if you were looking to short something at the beginning of the year, who was more universally loved?
If he's saying the market's done nothing in the last 10 years, adjusted for inflation, it's down about 40%.
Quick last word, Todd. 5 seconds. Go.
He has a lot of cash on his balance sheet, and he needs to utilize that. Go buy.
Right. Okay. It is time to set aside work. Kick back, have a drink.
Happy Hour is next with your hosts, Rebecca Gomez and